go. Hi, I'm Jennifer Goldsmith, and
I'm Heather Christensen.
And today we are giving a talk on the building your business, financial and legal considerations from start to finish. What we're going to be going over today, we have an agenda. We're going to share it with you in just a second here, but first we wanted to introduce ourselves. Like I said, my name is Jennifer Goldsmith. I am a practicing attorney here in Antioch, California. I am licensed and registered with the California State Bar, and I practice mostly in estate planning for individuals and then also in business for usually small business owners, entrepreneurs, up through medium-sized businesses, talking about everything from business entity formation to some of the considerations along the way, and then business succession planning at the end of your business life.
And I am the founder and CEO of My Offsite CFO. I offer virtual CFO services for small to medium-sized businesses, those that can't afford a full-time CFO of their own or even a full-time controller of their own. As part of our service, we offer bookkeeping services for the small businesses so that we can have the financial information that we need to do financial analysis and projections for small business owners.
So what we're going to go through today, I'm just going to share my screen with you really quickly so that we can go over the agenda. I don't think that I did that right. Don't mind me, I'm a little technology challenged. There's the share screen button. Okay, so share screen, we're going to share that right there and share screen. Great. All right, so it looks like you should be able to see my screen now. I don't think that I need that. I don't need to. Anyway, so this is our agenda for today, and I'm just going to scroll down here so that you can see the beginning parts of it. And so what we're going to start with is finance, and finance is oh so much fun. So Heather's actually going to handle it from here. Do you want your 5 tips and stuff?
Yep, go ahead and put up the other.
Okay, so we're gonna switch over real quick. And here is our first handout. Now, of course, when you get a copy of this video, you'll also get all of these handouts with the link to the video so that you'll be able to print them out, hang out with them, etc., whatever you want to do. So
there's also some additional information. We recorded 4 mini episodes, webinars regarding a couple of the pieces of this program that we're doing today. We did the program live yesterday in person here in the Antioch office. Thank you to everybody who came for helping us to learn what it is that our business owners are really interested in knowing the most. Like I said, there will be a 4-part series webinar that also comes as a part of the attachment to the email where you're going to receive a copy of this PDF. As well as more in-depth information. We only have 2 hours to cover today, and there is a lot of information to cover in 2 hours.
Probably more than there should be, but
So we'll get through it as quickly as we possibly can. Hopefully we won't bore you too much. The great thing about video is you can pause us at any time you want, so you don't have to sit through 2 full hours of us talking at you.
And sometimes, I know people listen to videos at like 1.5 speed, something like that. You probably won't need that today. Both of us talk way too fast. So I'd probably just listen to this at normal speed. If you feel like you can handle chipmunks, then okay, great.
So the first step so this is sort of the overview of what you want to do once you get to the point of setting up your bookkeeping, your online bookkeeping in the cloud. I recommend cloud-based software services. We're going to software as a service these days instead of the desktop version where you just download a piece of software and you never ever have to upgrade it. A lot of the software companies, especially QuickBooks, which is the 800-pound gorilla, it's the most well-known of all of the softwares. For accounting purposes, they have moved to, if you need to do any upgrades to your service, if you need to add additional users, if you need to add additional services, unfortunately, QuickBooks doesn't allow you to do that these days unless you purchase the new upgraded version. So if you don't need to do any upgrades, if you don't need to make any changes, you can pay the one-time $300 fee to get the software, put it on your desktop, and you're good to go forever. But if you ever need to do any kinds of upgrades, you're going to have to pay that $300 fee every time you go to make any changes to your software. Additionally, if you need additional users on your desktop version of QuickBooks, it runs more like $600 and above rather than the $300 for the one that you can pick up at any Staples, Office Depot, or Costco. So before you do anything, once you have that great idea for your business, before you do anything at all, you need to separate your business and your personal money. Now, that does not mean that you have to go out and get yourself a business banking account, although getting a business banking account is one of the things we do recommend. At the very least, you need to set up a separate personal bank account, a separate personal checking account where all of the money that you either bring in or spend for your business goes into and out of. There's this thing that the IRS does called piercing the corporate veil. And once you intermingle your money, even one time, if you intermingle your money, the IRS then has access to look at all of your personal finances on top of your business finances. So number one, before you do anything, go open a separate bank account and make sure the only money going in and out of that bank account is your business money only. That doesn't mean that you can't transfer money to yourself or pay yourself from your business bank account into your personal bank account. It just means that all of your business expenses and all of your business revenue, all the money coming in, should all go into the one bank account. So these are the 5 steps to set up your online bookkeeping in the cloud. Like I said, I recommend an online accounting program, either QuickBooks, which again is the 800-pound gorilla. There's tons of YouTube videos. There's information on Intuit's website. Any support that you could possibly need to get you set up for bookkeeping with the online service. There's also another program out there that I recommend called Xero. It's spelled Xero. Now, this was developed in New Zealand, so it has more of a European flavor to the way that they describe their expenses and their revenue. If from an accounting professional's perspective, it's a little different than what we're used to, but at the same time, the way it functions is essentially the same. So these are the 5 steps. Again, this handout will be included for you. It tells you what the information you need to gather. We do have a 4-week program that we offer, a group program that we offer that will actually bring you through all 5 of these steps, telling you exactly what you need to gather together and exactly the steps to go to in order to get it set up. Also, one of the 4 webinars that I recorded previously is an introduction to QuickBooks Online, which actually does walk you through a lot of the steps to getting yourself set up for the first time. So if you're just starting out and you're looking to get started, number 1, separate your business money. And then number 2, look for a software program so that you can track. If you start tracking from the beginning, it makes it a lot easier when you get to the year end and tax season. So on top of that, I use a bunch of different, because we all have our smartphones these days, right? Nobody is without this, right? So the easiest thing to do is to use that as a tool to help you manage your business. I know some people these days that don't use a laptop at all. When they travel, they don't bring their laptop. They work from their phone because it's so easy to do that. So these are the 5 top tools and apps to automate your processes that I recommend. The first one is IFTTT. This is actually more to automate other parts of your life, some of your marketing, such as your social media presence and that sort of thing. There's way too much to cover in this very short 2-hour period we have together. So please, again, the other webinar that I recorded was the top 5 tools and apps to automate your processes. And I cover all of these in depth. So I'm going to just touch on lightly IFTTT and the QuickBooks apps, which is at the end, and then we're going to spend a little time on the 3 in the middle. So the second app I recommend is Expensify. So the IRS has accepted electronic copies of your receipts and your invoices and backup documentation for your taxes since 1997. So anybody who tells you that you still need to keep paper copies of everyone is pulling your leg. The IRS actually will accept anything, an electronic copy, as long as it is materially the same as the original document. So Expensify does a great job with this. All you have to do if you're out and about and out on a meal with a client, or you're picking up something at the drugstore that's an office expense, or you're at Staples, you can take, using Expensify, you can take a picture of that receipt, that expense, and Expensify allows you to say who the expense was for, what the purpose of the expense was, and to classify it. It also allows you the ability to give your bookkeeper access in the app to all of the receipts that you collected during the month. Now, there's different levels of service for Expensify. I believe that for $5.99 a month, you get access to the majority of the features of Expensify. And like I said, it works just right from your phone. The third one is MileIQ. So expenses, especially meal and entertainment expenses, are one of the top categories that the IRS uses when they're looking for expenses, when they're looking to do audits. Now, please don't be afraid that I just said the IRS is auditing, because they really do select just a very tiny portion of businesses and people to do an audit on. If you can think about how many IRS agents there are in the entire country versus the number of people there are in the entire country, they don't have the manpower to audit everybody. So it usually is a very tiny percentage, and as long as you're staying within parameters, even if you're a little aggressive, you're not going to be on their list. MileIQ is a mile tracking application. So mileage and auto expenses are the second category that the IRS looks at when they're looking to determine whether or not you fall within certain parameters for your business expenses for the year. MileIQ uses your GPS in your phone to determine where you've been and how much mileage you've done. It also downloads the IRS standard rate mileage, and it calculates as you're driving how much you're going to be saving by tracking your mileage. One of the things that is required for your mileage is that you record where you're going to and who you're meeting during that time. And if there's an audit, the IRS will require a mileage log. So MileIQ generates reports that creates a mileage log for you that will support any deductions that you're taking for your taxes. We had somebody here yesterday in our live event that said that
he said that his wife, he estimated, drove approximately 1,000 miles a year for business. And once she started using MileIQ, that they found out that she was driving over 4,000 miles a year.
No, they determined that she had $4,000 worth of deductions. Now, at approximately 50 cents a mile, the IRS mileage rate runs somewhere between 54 or 57 cents a mile. At about 50 cents a mile, that's 8,000 miles a year that she drove for business.
Right.
So they wouldn't have been able to take the $4,000 deduction without that tracking. And MileIQ is a simple swipe. You swipe left if it's business, you swipe right if it's personal. It tracks everything for you automatically. You don't have to do anything except for give it a little information. Here's where I went, here's who I talked to, and it gamifies it, right? So as you're going along, it tells you how much money you've saved by using the MileIQ app. The last one I'm going to cover in depth, and then I'm going to turn it over to Jen for a little bit, is LastPass. So we all know that you should not use your same password on everything that you do. You should not use your, mama123 for every single website or application or whatever that you do. But all of us are guilty of using the same thing over and over again because it's easy. So LastPass makes it just as easy to have different passwords and very secure passwords for everything that you do. And for $12 a year, so $1 each month, you can share passwords with other people, but you don't have to give them the password. So what LastPass will do is it will allow somebody else to log in using your username and your password without showing them the information and without allowing them to change the information. I use it with my assistant in order to give her access to things that she needs, but I also know that she cannot see the password, she cannot change the password, and I'm still in control of everything, all of my passwords and all of my security. All you have to remember with LastPass is one master password. The application remembers the rest of it and enters them automatically for you when you log into the particular websites. And it allows you to do things like some government websites require you to have ridiculous passwords from my perspective. 15 characters long. It has to have one uppercase, one lowercase, one number, and one special character. It can't be the same as the last 15 passwords that you've used. And
it can't be a word in the dictionary. That was covered California. It couldn't be a word in the dictionary. So if you used any word ever as your password and then just tried to add numbers and characters and things to it, didn't work.
Yeah. So before I had LastPass, I went through all the members of my family, right? I, put the names of my sister-in-law and my brother, and then added somebody's birthday at the end plus an exclamation point. And after a while, I had gone through all the members of my family because it also made me change it every 30 days. LastPass just makes it so easy. You click a button, it generates the passwords for you, and you're done. And I forgot to mention MileIQ. Speaking of cost, MileIQ is $5.99 to buy the app one time. So for $5.99 one time, you have unlimited drives for the year or for the month. If you don't want to pay $5.99 and you don't drive that much, they will let you track up to 40 drives per month for free. But if you think you're going to go anywhere over that,
that's once a day, 1.5.
Yeah, 1 to 1.5 times a day. Even if you go, because it's going to track whenever you have your phone on you. So when you're going to the grocery store, it's going to track. When you're going down to the mall, it's going to track. When you go out to dinner, it's going to track. So most people go over 40 drives in a month. But if you're somebody that doesn't drive very much, or you don't take your phone everywhere with you, you might not have to pay for it. But for $5.99, it's an easy yes. And then the last one is the QuickBooks apps. There's a bunch of apps. The only ones I can think of off the top of my head are the CRM and the shopping cart, the web shopping cart. Will allow you to integrate with QuickBooks, QuickBooks Online typically, to allow you to integrate so all of your systems are automated. I'm the queen of automation. I don't want to do data entry if I don't have to. As much as I humanly can, I try and automate everything, and then I just go back and verify. Trust but verify. And then last but not least is what we have on the last page here. And again, this is going to be included. The handout is going to be included as a link when we send you the video. So you'll have this for yourself to use for business going forward. So this is the commonly used business expense categories. These are the things that you can deduct from your taxes, that you can deduct from your business. And then there's some things at the bottom that are potentially capital expenditures. So those are big purchases that you might want to take a little bit of the expense every single year rather than taking one big lump sum. Business vehicles being one of the major ones, machinery and equipment, or if you're furniture and fixtures, if you're furnishing a brand new office, you might want to take the deduction for that purchase over the course of several years, depending on what your revenue is for the particular year. And now I'm going to turn it over to Jennifer. We're going to talk about business entity formation next.
Okay. There you go. Quick little jump over to see. So we're going to talk about business entities. And again, this is California specific. I do want to make sure that we mention that. So if you're somewhere outside of California and you're watching this video, this may or may not apply to you. And I also want to just let you know that all of this information that's on this particular handout is directly from the Secretary of State here in California. So if you have not been to the Secretary of State's website, you can go there and you can get all of this same information, but we've tried just to condense it down for you and get it to really the nuts and bolts of what you need. So I'm going to skip down here just a little bit. One thing that I do want to mention is that this information and the things that you can do for yourself through the state of California, through the Secretary of State's website, all of the forms that they create for you, etc., those are the minimum statutory requirements in order to form a corporation, form a different type of entity here in California. Now, that may be fine for your business, but it may not. You may need a little bit more in terms of, articles of incorporation, just detail in terms of what's going on with your business, etc. So I am going to actually start at the bottom of this list instead of at the top. And so I sort of just scrolled down here so that you can see. But I want to start with a sole proprietor because that is the easiest business entity to form. Most of you have probably formed a sole proprietorship without even thinking about it. If you sold lemonade from a lemonade stand when you were a kid, you were a sole proprietor, unless of course you had a partner, in which case maybe you were a partnership. But a sole proprietorship just means that you, yourself, and you are the only one who is in charge of your business. You are not really an entity of any sort. And the great thing about being a sole proprietorship, like I said, is that it's super easy. You don't really have to do much of anything if you are just doing everything under your own name. So say that I just was a business coach or a life coach or something like that, and I didn't actually create a fictitious name for my business. I just was a life coach as Jennifer Goldsmith. I wouldn't need to do anything except for collect revenue and pay out my expenses. And I, of course, would do all of that through a separate business account than I do through my personal account. In doing that, though, all of the revenue that comes into my business, as well as all of the money that I pay myself, is all personal income. And while you can still deduct certain things on your taxes for that, everything is run as if it's personal income, and you pay taxes on it based off personal income. So that can be the disadvantage, is that personal income taxes tend to be higher than corporate taxes. And so a lot of people do choose to form some form of a corporation. And we'll go into a little bit more detail about what some of those options are in just a second. So sole proprietor is when you are just all by yourself doing something. So a lot of times that's coaches, maybe it's dog walkers or house sitters, or maybe even you're just selling products, but you're selling them under your own name for any reason. Anytime that it's just you, you are considered a sole proprietor. You also can be a sole proprietor even if you are working under a different name. What you are then is you are a sole proprietor working with a DBA, which is a doing business as, or a fictitious name. They mean the same thing, a DBA and a fictitious name. So I may have XYZ Pet Sitting Services, but XYZ Pet Sitting Services, the only employee, the only person who gets any revenue from that whatsoever is me, myself, and I. So if that's the case, you are still a sole proprietor, you just have a fictitious name or a DBA. And you are still paying all of your business expenses and getting all of your business revenue as personal income, and you're paying personal income taxes on all of that. The other thing with a sole proprietorship to remember is that you are 100% liable for anything that happens as a result of your business. So if you are a life coach and somebody sues you, they are suing you personally for everything that you could potentially own: your house, your car, your income, anything that's in your name. If you are a pet sitter and something happens to somebody's pet, even if you are doing it under XYZ Pet Sitting, but you are sole proprietorship, you are 100% liable for anything that happens while doing business as a sole proprietor. So those are some of the two potential pitfalls with being a sole proprietor. Like I said, the upside of it though is you can start one tomorrow. Actually, you could start one later today. It's not quite 5 o'clock yet. Technically, you can start one until midnight. So yeah, so the great thing about a sole proprietorship is super easy to get going. Bad thing about a sole proprietorship is that there is a lot of liability and everything is run through your personal income tax bracket. So I'm gonna scoot up here a little bit so that we can see the other options. The next one, now on here it has it listed as a limited liability partnership, but that's just because that's the form that California has. You can also just have a partnership. A partnership is literally the same as a sole proprietorship, except that we're partners now. And so I am now 100% liable for everything that happens with our business, and so is she. All this does, you still run everything through your personal income taxes. And now not only am I responsible for what I do in my business, but I'm responsible for what Heather does in my business. So you've actually opened yourself up to greater liability. And again, 100% liable for this if anything happens relating to your business. And you've opened up both yourself and your partner to that same liability. Now, that can be great if I'm the one that's always getting us in trouble and Heather's the one with all the assets. Awesome for me, not so much for her. So, you just kind of have to weigh the pros and cons of it. But a partnership is basically a sole proprietorship, but just with another person involved. Limited liability partnerships and limited liability companies are sort of similar in this way. A limited liability partnership is it's for professionals of certain areas of practice. So lawyers can form an LLP, a limited liability partnership. Some financial people can form these types of businesses. It's usually people who have very stringent rules of ethics or guidelines, professional codes, etc. And the reason is that, well, I can only speak for lawyers on this specifically, but for me, the reason that I can only form a partnership with other certain professionals is that I'm not allowed to split my fees with anybody. And so if I were in a partnership where somebody and someone were paying me for work that I had done, and I then owed 50% of it to Heather, even though she had never done any of the work, that wouldn't be acceptable. Because if I'm offering legal services, then I need to be paid for that. And I can't just pay Heather when she doesn't offer any legal services and she's not an attorney. So limited liability partnerships are for very specific professionals. And if you don't know that you fall into that category, you probably don't. A limited liability company, on the other hand, is sort of the catch-all that most people in California fall into when they want to limit their liability for things, but they're not ready to go the route of a full corporation. Limited liability company is relatively easy to form. It does limit your liability, not entirely, but it does limit your personal liability for things that happen in your business. Again, though, with the limited liability company, what people oftentimes do is they run it like a sole proprietorship, even though it's a limited liability company. You absolutely cannot do that, because as soon as you start running it like it's a sole proprietorship and you intermingle your funds or commingle your funds, or you do anything else that can be considered piercing the corporate veil, all of a sudden that limited liability company means nothing. And that's all it takes realistically. The same thing as what it takes to pierce the corporate veil for the IRS. You can pierce the corporate veil on the other side of things, and then all of your personal assets become on the hook for any liability issues that you may have had, in terms of product failure or services not rendered or anything along those lines. So you do have to be careful with all of these forms of entities that you are very much keeping your entity separate from your personality. So a business entity in California is legitimately its own person. And so you need to make sure that you treat your business entity like it is its own person and not like it is merely an extension of yourself. When you start treating your business like it is an extension of yourself instead of like it is its own person, that's where you get into trouble, and you have these crossovers that create this piercing of the corporate veil. Piercing the corporate veil is just a fancy way for saying you mixed up your own individual person with your business person, and now they can come after you personally for anything that you've done in your business. So the other nice thing about a limited liability company is that it does allow you to run some business expenses and things through the business, and it may have tax implications. Now, again, neither of us are tax professionals, and so we're not going to give you specific tax advice. That's something that you should discuss with your own CPA or somebody else who handles your taxes. But there may be tax advantages for one of these entities over another one. Okay. So then I'm going to scroll up here a little bit more just so that you can see. These are all of the different ways that you can form a corporation in California. Now, I'm only going to go over the two most common corporations in California. Most of you are probably not forming nonprofit organizations, and most of you are probably not dealing with foreign companies or foreign corporations here in California. So I'm not going to go over those. What I'm going to talk about are the differences between a C corporation and an S corporation. Now, the basic differences between a C corporation and an S corporation has to do with the number of shareholders. An S corp or an S corporation is a small corporation that is held by a small number of shareholders. This is also sometimes called a closed corporation or a private corporation. Now, what that means is that you have to have fewer than 100 shareholders, and the shareholders can, they don't have to meet all of the same requirements that you have to as a C corporation. The biggest thing with being an S corporation is that you do not have to have your annual meetings, you don't have to have directors meetings, you don't have to keep minutes. It is harder to pierce the corporate veil on an S corporation than it is on a C corporation in general. Now, of course, these are all generalities, and unless we look at your specific business, I can't tell you for certain that that's what's going on with your business. But an S corporation, because it doesn't have so many of these stringent rules, it can be a better business entity for small privately held companies, especially family held companies, than perhaps a C corporation would be. A C Corp, on the other hand, is your general stock corporation. That's what you see traded on the NASDAQ and what you see traded on the New York Stock Exchange. All of those are publicly traded companies. They are C corporations, and they are large corporations. They are held by a multitude of stockholders. They have a board of directors. That board of directors meets regularly. They keep all of their minutes, they keep all of their documentation, and they, just follow along the way that they're supposed to. They have very stringent rules about what is required of them in order to keep their corporate status and in order to avoid piercing the corporate veil. Now, I will tell you that if any of you are discussing the difference between an S Corp and a C Corp and you're not sure, and the only determining factor for having an S Corp instead of a C Corp is this idea of keeping minutes and so forth, there are companies out there that will actually hold your directors' meetings for you, keep your minutes, and keep you in compliance with all of the requirements for having a C corporation. So just keep in mind that there is sort of an out for that if you're not very good at doing those things yourself, but the C corporation makes much more sense for you than the S corporation. Again, there are also tax implications that can come into play between a C Corp and an S Corp. So it's something that you need to discuss with your tax person.
And also, just as a side note, when you form a corporation in the state of California, you automatically form a C Corp. In order to form an S Corp, there is additional paperwork, there is an additional form that needs to be filled out for you to become an S Corp, and it has to be done within a certain amount of time after you form the C Corporation.
Mm-hmm. Yes, so just to keep in mind, those are some of the different ways that you can form a corporation here in the state of California. I will tell you that it's very easy if all you have is a very basic corporation. It's very easy to form a corporation in California. The hard part comes in actually taking care of making sure that you are meeting all of your requirements as a corporation so that you're not merely a corporation on paper, but not in reality.
Right, it's like a one-page form and $100, I think, to form a corporation here in California. It's really easy.
Not difficult. The problem is it's not the formation that's the issue, it's the continuation that's the issue.
Right.
So you need to make sure that you really understand what is required of you by being a corporation. Now, the other thing is that people will ask, well, what's the point in becoming a corporation? The point is that, again, a corporation is its own separate entity. It is completely separate from you as an individual. And therefore, all of the liability regarding your company is owed to the corporation and not to you as an individual. So it does create that barrier. It very much so helps to offset that liability by creating a corporation that separates your corporate money from your personal money. That part is great. If they pierce the corporate veil, though, your personal liability, again, right up there with the corporations. The other thing is that for tax implications, again, sometimes you can run things through the corporation and pay for those on the corporate tax level and only pay personal income taxes on your actual salary that you draw down from the corporation. When you do that, you can sometimes lower your tax liability because personal income taxes tend to be higher than corporate taxes.
Right, and when we get to employee or independent contractor, which is the next section in our presentation today, we'll tell you one of the things that are deductible from your business if you're a corporation versus a solopreneur or another entity.
Right. So Those are just the basic forms of business entities that you can create here in California, and just a quick overview of some of the pros and cons. If you have questions about, exactly what type of entity you should form, what makes the most sense for your particular business, what the pros and cons are, what the tax implications are, you really do need to talk to a professional about that and get some personalized information. But we did just want to run through really quickly what the different options are here in California so that you could begin to think about, well, do I really want to be a solopreneur? Do I want to be a sole proprietor? Do I really want to have a partnership that's just a partnership, a general partnership, or do I want to see if perhaps we could be an LLC, somehow limit my liability, or do I want to go, the 800-pound gorilla? Do I want to go all the way up to a corporation? And if so, which type makes sense for me? So we did want to go over those things really quickly. If you have additional questions, please contact a professional, or like I did mention, you can go to the Secretary of State's website and you can get some more information about that. There's also, this isn't really included, but it was a question yesterday, so I sort of want to bring it up. There was a question about people who form corporations outside of the state of California and why they might have done that. Yeah. So there are a couple of things. First of all, if you're doing business here in California, California is going to come after you for taxes no matter what for the business that you do in California. So you are unlikely to save yourself much in terms of taxes regarding the state of California by forming a corporation outside of the state's borders. The only way that you would save significant amounts of money regarding taxes for the state of California is if you are actually doing a significant portion of your business outside of the state's borders. In that case, it may make sense to register your corporation somewhere else and then to merely register it as a foreign corporation here in California so that California can get its bits and pieces. The other reason that people used to go outside of the state of California and outside of any state that they were in is that a lot of people used to file corporations in the state of Delaware. It has the most corporations formed, I believe, in the entire United States. Mm-hmm. And the reason for that is that they were very business friendly and they have a long history of court cases. So there's a lot of precedent set in the state of Delaware. The great thing about that is that no matter what you do, you probably can find a court case that's already been on that, that's already been heard on that subject. So when you make a decision what the likelihood is of winning or losing that particular case if someone were to bring it against you in the state of Delaware. Since then, there's been a lot of corporations formed all across the country, and most states now have a significant amount of precedence for themselves. They may not have as much in your particular field, and that's something that you could certainly look into to decide if it makes sense. But the reason that most people formed in Delaware in ages past really does not apply anymore. So the general rule of thumb now is to simply apply to be a corporation in the state in which you are practicing most of your business. And for most of the people watching this, that's probably going to be California.
And also to mention, if you form a corporation in the state of California, you will owe a minimum of $800 worth of taxes every year. And when you first form your corporation in the state of California, you owe the first payment of $800 within the first 90 days. So just to keep in mind, yes, we already said to file the paperwork is $100, but shortly thereafter, you do have to make a payment to the state of California for $800, and you will owe $800 minimum each year thereafter.
No matter what.
So no matter how much you make, or if you lose, even if you lose money during a year, you still owe the $800 to the state.
Right. So again, it's something to look at your personal, finances versus your corporate finances, run through the tax scenarios and see if it makes sense for you. You may still end up saving more than that $800 on your personal taxes, which may make it worthwhile to form the corporation, but that's going to be a personal decision and it's going to be based off of your finances. We can't give you any advice on that one way or another because we don't see your books.
Right, exactly. And again, we're not tax professionals. If you have a trusted CPA, if you don't have a trusted CPA or an enrolled agent, please get one and sit down and have this conversation with them when you're looking at forming an entity and what makes the most sense based on your history of personal taxes, and they're the best ones to give you that advice.
Right. Okay. So now the next thing that we're going to move on to here, and I'm going to pull it up, is making a business plan. So we're going to run through most of this very quickly because, as we mentioned, we probably have more stuff than we really should in this program today. But the other thing is that when you're making a business plans are generally used for a couple of different reasons. They're either used to get outside financing. So if you're looking at venture capitalists, angel investors, or going to your local bank for outside investments, or they're looking for, sort of going to shareholders or going to other people who are already invested in your corporation and asking for additional funds. Or some people just have a business plan because they kind of want to know where they're at and where they're going.
It's a good roadmap for where you've been and where you plan to go.
Right. And so having a business plan is a great idea. It's a great idea for anyone who wants to go into business for themselves or who already is in business for yourself. But the business plan that we're going to talk about is more geared towards when you're looking for exterior financing, because this is usually the most complicated. It's the one where you have to meet all of the different requirements and you need to make sure that you're appealing to people other than just yourself. Excuse me, sorry. So I believe there's 8 different pieces of the business plan, and most of them, there's about 75% of them that are more or less just a check-in on yourself. Your executive summary, which is just that, it's a summary, it's a snapshot of your business.
And as it says here, it's the part that appears first, but you normally write it at the end of your business plan. After you've covered the other 7 sections of the business plan, then you go back and write an executive summary that sort of ties it all together and puts a bow on it. The majority of your business plan is about your vision, your mission, your goals for your business.
Mm-hmm. So an executive summary is sort of similar to when you were in high school and you had to write essays, and they always told you to write the body of your essay first and then go back and figure out your introduction and your conclusion.
Exactly.
The executive summary is more or less that, but for business owners. Company description. Company description is relatively easy. You need to provide information about your company. And I know that sounds really simple, and it is, but again, it's something that only you're going to be able to do realistically. This is the information that is particular and pertinent to your business. So you need to know things about your products and services, your locations, your operations. Again, just give a description of your business. We, of course, have it broken down here much more clearly and into all of the minute details that you're going to need for a business plan. But in terms of just sort of giving you an overview of what a business plan looks like, company description is more or less what it sounds like.
Right. It's sort of, if you have an elevator pitch, it's an expanded elevator pitch. Who you are, what you do, where you're located, who you serve. That's basically what the company description is going to cover.
And then market analysis. Market analysis is sort of who you serve, realistically.
Right. So you're looking at the market around you, your target audience. Who do you serve right now? Who are your main clients right now? And especially if you're looking to expand, if your business plan is being put out there as an expansion tool, this is where we want to expand into. It also wants to identify who your potential competitors are going to be and what might potentially stop you from the expansion or from gaining more market share.
So that's market analysis. The thing that we want to remind everyone is that unless for some reason you are completely innovative in your market analysis has probably been done for you by other people. You can probably find information about it elsewhere, and also your potential investors already have it.
Right.
So don't try and fudge it. Don't try and make it up as you go along. It's out there somewhere. Take a look at it. Take a long, hard, realistic look at it, and make sure that you're not trying to pull the wool over someone's eyes, because they will know if you are.
Especially if you're going for financing. Somebody said yesterday, especially if you're going for financing to things like banks and even angel investors, they're not your friend. They're looking to pick this apart and to tear it apart as much as possible. Not in a bad way, but they're hedging their bets. They want to make sure that the business plan they're looking at and the money they give you is as safe as it can be for a venture like this. So they're looking to make sure that you understand who your competitors are and what the potential roadblocks are and what the potential problems are that you might have.
Okay, marketing and sales. Marketing and sales, it is what it's, again, all of these, none of this is rocket science. These are things that you know. You need to know who what your sales strategy is. What's your pricing plan? Are there opportunities for discount built in? Think about like when you go to buy jewelry. Jewelry is always on sale for 60% off, always. If you happen to hit the 1 week out of the year where it's not on sale, you should come back the next week because it will be 60% off. That sort of discount is built into the jewelry market. There is this marked up value, and then there's discounts. Most retail sales in general are that way.
Right. Think about retail sales. There's almost always a sale going on, or there's always a coupon when you go to buy something. Those discounts are already built in order to the loss leader, in order to bring people in, so then they buy the other things that aren't on sale.
Right. So you need to identify that all of that though. You need to identify what your marketing strategy is, what your sales strategy is, what your price point is, how you fit into the market regarding your price points, whether or not there are discounts available. And if your marketing or sales pitch is completely different from somebody else in your industry, you have to be able to back it up. This goes back to market analysis and everything else. You are not the first business plan that they have seen. You won't be the last one that they have seen, and you are not the first one in your industry, most likely, like 99.9% of the time. So if you are going to be way outside of your target for marketing and sales, you need to make sure that you explain yourself and that you do it really well.
And once again, going back to both market analysis and the marketing and sales, make sure you're comparing apples to apples. Make sure that you're not comparing yourself to a business that's similar, but not exactly the same. Because once again, they're going to know that the business that you're comparing yourself to isn't exactly right. So make sure you do your homework and try and find a business that is materially similar to what you do and the services and products that you provide.
Okay. I'm going to scroll down here a little bit more, and we're going to go on to organization and management. Now, again, all of these things, they're pretty succinctly and clearly laid out in the handouts that you're going to get copies of. So don't worry too much about, what's on the screen right now, whether or not you're missing things, etc.
And we pulled this information like we did from the Secretary of State. We pulled this information from the Small Business Administration, and they are a phenomenal resource for you. They can give you a lot more detailed information about this, but we also recommend, just like with anything, like we recommend you go to an expert for taxes and an expert for insurance. Go to an expert for business. Find a business consultant, somebody that writes business plans all the time. We absolutely recommend that you take a first pass at it because you know your business better than anybody, but find an expert to go over it with you when you're done.
Right. And, again, just like the Secretary of State for Business Entity Formation, they have forms, they have things that you can fill out. And, for the most part, they're relatively self-explanatory. Okay, I've been talking too long, apparently. The Small Business Administration, they also have forms that you can fill out for these business plans. I believe that it's about 35 pages long when we looked at it. So just be aware that this is not a simple process. It is not a short process.
This is not a sit down in 2 hours and bust it out. You're going to have to think about all of this.
This is your dissertation for your business,
right?
Basically. So, it's going to take a while. It's not going to be fun. It's not going to be easy. But once it's all said and done, you're going to have something that will actually help you get from point A to point C in your business.
The light at the end of the tunnel is not a train, and it's very worth it.
So the next little section here is organization and management. This is, you need to tell them who's involved in your business. If it's just just you, it's just you. But it also, if it's not just you, then hey, who's the face of your business? Who's behind the scenes? Whether or not you have chosen a business entity structure. So are you a corporation? Are you an LLC? Are you a sole proprietorship? And why did you pick that? Make sure that you know the why for everything that you're putting in your business plan. You need to deal with human resources if they're going to have any employees of any sort whatsoever. You need to know if you have an advisory board. These are all things that you need to consider, and they're all based off of your corporate structure. So,
and now we're going to talk a little bit about financial analysis, but I will tell you that if you're looking for financing, this is the most important part.
75% of your business plan, not about finances. 25% of your business plan, all about finances. 90% of your investment strategy, though, for people who are going to give you money, all about finances.
Yeah. The bank is going to flip to your financial analysis first. I can tell you almost immediately, and then they'll look at the other things. Some of what they call the soft identifiers are going to be your marketing and sales, your organization and management. Those are going to count, but the bank is going to take a big red pen to your financial analysis. And the number one thing I can tell you about financial analysis for a business plan is to make sure that you do not overinflate your numbers. You need to be as conservative as possible. You need to say, if you think you're going to make $1 million, you need to tell them you're only going to make $750,000. If you think you're going to spend $500,000, you need to tell them you're going to spend $750,000. You need to underreport your revenue, and you need to overinflate your expenses when you're speaking to a bank or an investor. And that doesn't mean out of the realm of possibility. You have to be absolutely realistic, but you have to be as conservative as you possibly can, because the people you're talking to, the people with the money, are going to be conservative in their analysis. So detailed financial statements. If you are already in business, detailed financial statements are absolutely necessary. You need to take your history and you need to be able to lay it out for them. This is how our business has been running up until now. You need to provide them with a balance sheet, an income statement, and a cash flow statement. Cash flow statement says, this is where the money came in from. This is where the money went out from. The income statement tells your revenue and your expenses. And then the balance sheet says any of this. So somebody told me once, think of your balance sheet as parking lot, right? So the balance sheet is the place where you put all of your assets. They just sit there. It's things like your checking account, your credit cards. If you have things like computers or assets, if you own your building, those sort of things, any loans that you have already taken out, those are the things that sit on your balance sheet. And there's some small changes. The most activity in your business is usually through your income statement or through your cash flow statements. You need to identify your current needs for cash flow. You need to tell the bank or the investor, what does it take to run my business right now? And again, realistically, what does it take to run my business right now? And then how will future growth be funded? A lot of banks and investors want to see that you have skin in the game, right? That you're investing your own money. If you are telling them that I have no money to invest, I'm not going to get the money from anywhere else, it's not going to be provided from operations, I just want you to give it all to me, it's probably not going to fly. And again, like I said, provide estimates. You're going to want to do a projection, especially if you're trying to fund a growth. If you're looking to grow, growth takes cash. Cash gets eaten up quickly because normally when you're growing, you're expending a lot of money in whatever the programs or the initiatives are that you're trying to do to grow your business. But those take money. Very few people are able to get those resources for free. So are you going to bootstrap? Are you going to get money from somewhere else? Are you going to borrow from your aunt? All of those kinds of things come into play. And if you're going to request funding from them, be specific and realistic. Know exactly how much money you want them to give you. If you're just telling them, give me as much as you can, they're going to come back with a number that's a lot lower than you're expecting.
Okay. And then you have appendices and supporting information. This is basically just make sure that you have all of your contracts, all of your leases, all of your charts, all of your statistics, all of those really boring backup things that nobody ever wants to keep track of. And both of us are going to tell you that you have to keep track of everything and keep copies of everything except apparently your receipts for the IRS.
Still have to keep track of them. They can just be
It
electronic.
just can be electronic.
I have one on my phone from yesterday that I have kept track of.
And these types of things can be electronic too, but make sure that you have them. If you've done any sort of studies, if you've done any sort of research, if you have statistics to back up your information, if you have your financials because you've already been in business for a while, make sure that you have all of those things pulled together, because every time that you refer to some sort of concrete something, you better have a piece of paper in the back that backs it up.
And again, you don't want to overwhelm them. You don't want to give them so much information that, you don't want to hand them a 100-page document for them to go through. Now, some big banks may go through that, but especially if you're going to an angel investor or a small bank, they may just take a look at that and say, no, I don't have time to review that, no matter how great your idea is. So you have to strike a balance between enough information and too much.
Right. And then make your plan stand out. And I will again just sort of show this to you really quickly. But this is, be different and make sure, again, striking the balance, making sure that you're giving the right information to the right people. Know your audience. That's always a big one. Your business plan is going to look a lot different when you are going to talk to a big corporation or a big bank or a venture capitalist versus talking to an angel investor or talking to your aunt. If you're talking to your Aunt Sally about whether or not she's going to give you some money for your business plan looks a lot different than if you're going and you're talking to Bank of America. So just make sure that whomever you're speaking to, that you are tailoring your business plan for them and you're tailoring your business plan to what it is that you're trying to accomplish.
And one of the bullet points here, which we're going to stress again, is pay for needed help. Even if you have done a lot of this yourself, like I said, the 75% of this is sort of those soft things, the what's my market analysis, what do I think is going to happen, how awesome are we, but if you need help pulling it all together and making it into a professional package, especially if you're going to a big bank, even a small local bank, make sure that it's professionally presented. Your business plan reflects who you are and who your business is. So make sure it sends the right message.
Okay, so there will be some additional resources on that. You'll get a copy of this. And then also, like we mentioned, Small Business Administration is a great place for you to take a look for that. But we want to move on because we're probably talking more than we should.
We
as
always do.
So we're going to move on now to our next little thing here, which is employee versus independent contractor. And this is for a lot of you who are already sort of in business for yourselves. And I have to figure out how to switch here because we don't have any handouts for this. We're just going to
You
talk.
can stop share. So let me do this.
Okay. See, she's more technical than I am.
I'm a techie, apparently.
She's the techie. I'm just here for, because
She talks better than I do, though.
Anyway, so now we're going to talk about independent contractors versus employees. Like I said, there's no handouts for this or anything. We just want to give you some information. This is oftentimes sort of where most of our small businesses fall into the category of whether or not they're dealing with independent contractors or employees. This is one of the most important things for you to consider when you're in the middle of your business. So when you're first starting out, it doesn't matter. It's usually just you, right? I mean, you have this great idea and you are everything. You are the admin, you are the bookkeeper, you are the receptionist, you are the lawyer, you are the file clerk. That's in my business. I'm sorry, it's the one I know best. But I mean, maybe you're the manufacturer, you're the sales distributor, you're the actual salesperson going out and, talking to all of the retail establishments that you're trying to get yourself put into.
Right.
You and your Ford F-150 are the distributor and the trucks and all of that. And now I'll probably get in trouble with all the Chevy guys. Believe me, her husband's Mopar. I have no affiliations. You can try and change that later if you really want to, but
and I was going to say, I have a manufacturing client, and just like Jen said, she's a solopreneur and she does everything, right? She produces the product, she packages the product, she's the salesperson in the retail store. She goes out to shows and then she's the salesperson there, but she's also the salesperson on the wholesale side, trying to get herself into all the
different stores because she has her own store, but she also sells her product in different stores. She sells her product across the ocean. Well, she's everything for her business, including paying her bills and bringing in the money.
Doesn't
and
she
all
have
of
you
that.
for that now, though?
She has me for most of that now.
So, but when you first start out, you really are, it's usually just you. If you have a partner, maybe it's you and your partner, but realistically, if you're 50-50 in the business, then there's no need to consider whether or not either of you are an employee, because you're not, you're the partner.
And again, this goes back to forming certain types of entities. You can be the employee of your business, but usually as a solopreneur, it's just you.
Right. So the big thing comes when you get sort of towards the sweet spot of your business where you're like, oh, well, look, I could have an assistant now. That would be so bad. I would do this, and I would just be excited.
One of the first people you hire, or that we recommend,
Two
is
people that you should hire right off the bat: an assistant and a bookkeeper.
those are the two things that usually the assistant can help you do all of those little administrative things that drive you crazy but have to get done, and then a bookkeeper can take care of your money, especially if you're not good at keeping track of your money.
Yeah.
So
And if you don't need a bookkeeper, well, then hey, come on over and hire a lawyer.
you can always use one of those. Trust me, everybody I know can use one of those.
But anyway, so one of the first things that people actually spend the money on, though, is an assistant, because frankly, even if you can't hire a bookkeeper, a lot of people will have their assistant help out with the books and things like that. And usually money and admin are kind of the two things that people need the most assistance with. As really creative people who want to be out on their own, who want to have their own businesses, a lot of times you don't want to deal with the mundane day in, day out sort of tasks. So first thing that a lot of people get is an assistant. And then we have the problem of, is my assistant an independent contractor or are they an employee?
So what makes somebody an independent contractor versus an employee?
So there are about 21 different factors for whether or not somebody is an employee versus an independent contractor. And we are not going to go through all of them. And frankly, you don't need to go through all of them, because the likelihood is that no matter who you contract with to do anything, they're going to cross over at least some of these 21 factors. Just like anything else in the law, it's usually the preponderance of the question, which means
it's
that
not they have to cover all 21. They just have to cover most of them most of the time.
Yeah, or they have to cover some really significant ones some of the time.
Right.
So it's a very sort of fluid, gray area type of a thing, which is why people get themselves in trouble.
Right.
So the problem is that an independent contractor, most people think that the most important word in that sentence or in that phrase is contractor, and it's not. I don't care if you have an independent contractor agreement, although it's a great idea. I don't care if you have one. If you treat your independent contractor like an employee, that contract doesn't mean anything. The big key word in independent contractor is independent. They need to be able to act on their own to do their job to the best of their ability under the circumstances that they deem necessary. So if you have your own place of business and you require your contractor to come to your place of business at a specified time for a specified meeting in a specified location, all of a sudden you may have an employee instead of an independent contractor, because they are no longer allowed to complete their work on their own terms. Being an independent contractor is all about the independence, about being able to set your terms about how you work, when you work, and what you work.
If you require your independent contractor to come to your place of business in order to do what they want, what you've asked them to do, all of a sudden they're not independent anymore. You can have a deadline and say this needs to be done by X number of days, but you can't direct them in the way that they accomplish that thing, whatever it is. You have to give them the discretion to decide whether or not they're going to do it in a specific way. There's also
now, I want to mention that there is a caveat to this. If your business is only open during specific hours and therefore contract work must be completed within those hours, and it does need to be completed at the office because that's simply where like equipment is stored or access to certain things is only available there, you may still have an independent contractor even though they have to come to your place of business to conduct their business. But you have to allow them the freedom of saying, okay, this is what I need you to do, and it needs to be completed by a specific deadline. these are the hours that we're open, and this is where you can locate the materials that you need, but I'm not going to control when you come in, how long you work on each day, those types of things. So you can have them come to you, you can have them come during specific hours, but you still need to emphasize the independence of their decisions.
They have to direct when they're going to come and get the work done, not you.
Right.
You can, like Jen said, I mean, you can say, these are the parameters, here's how I can assist you in getting this done, but they have to be the ones that actually direct when, where, and how they accomplish that task. I have a client that has had independent contractors over the years, and they have said to me in the past, well, this person works for multiple people. They have all sorts of clients, and as long as they have multiple clients, then it's okay. They're an independent contractor. So I can have them come to my office on this day at this time for a specific length of time because, well, they have other clients, and that makes them an independent contractor.
And that's absolutely not true. Think about somebody who works for McDonald's and works for Target. They have two separate part-time jobs. Maybe they even have two separate full-time jobs, but they are still employees of both of those corporations. So just because somebody works for somebody else besides you does not make them an independent contractor in and of itself.
Another thing that you can do is ask for an invoice. So even if it's an individual person, so normally with independent contractors, what I recommend to my clients is they put a couple of things in place. Number one, you ask for a W-9 up front. A W-9 is a document that gives you their information, their personal information up front, their name, their address, whether they are a sole proprietor or just a person, what entity they are, and gives you their tax identification number. Now, some people are a little leery of this, but if they're unwilling to give you this information because you will need it for 1099s at the end of the year, I would be leery about hiring them.
The same thing goes back to when we mentioned an independent contractor agreement. An independent contractor agreement is great. It sets the guidelines, it sets the boundaries, and it also sets up the expectation that they are an independent contractor instead of an employee. Again, if you're hiring somebody as an independent contractor and they refuse to sign an independent contractor agreement, I would be very leery of that, because if they're willing to and accepting work as an independent contractor, there realistically should be no reason for them to avoid signing a contract that explains the relationship.
Right. So those two documents are the two documents I normally recommend that any of my clients put in place if they're going to be hiring an independent contractor. The W-9 up front and also an independent contractor agreement. That also makes reporting at the end of the year for 1099s and things of that nature a lot easier. And also ask if at all possible, do not pay your people without an invoice, because you need a receipt that they invoiced you as an independent contractor. If you just leave a check out for them with their name on it, number one, that doesn't count again. Don't want to scare anybody, but that does not count for the IRS. If you go through an audit, I had a correspondence audit for a client. If you need to prove your expenses to the IRS, you must have both an invoice or a receipt as well as the canceled check or the line item in your bank statement that says that you paid this person. If you are missing one of those two pieces, the IRS will disallow the expense. And if it happens to be to an individual person, now you're also in violation because you did not issue them a 1099.
And so the way that this came up the other day, we were talking to our, to the seminar participants who were here live and in person, and one of them mentioned, gardeners and home cleaners and things like that. So especially for some of you who are running a home-based business, you want to make sure that you are getting the deductions for those. If you run a business out of your home, you have clients there, you have a home office, etc., some of your cleaning bill may be deductible. The same as if I have people come into my office here and clean it at the end of the night, my cleaning crew expenses are part of my business deductions. But if you're just leaving a check out for your housekeeper every week or every 2 weeks and they're not invoicing you properly for it, you can't 1099 them if necessary. You can't deduct that from your, from your expenses, from your business expenses at the end of the year. And you're losing out on deductions and you're losing out on things that you can count for your business. So just make sure that you are absolutely getting invoices, that you are making certain that whenever you're making a decision, you are considering, is this something where where I'm directing somebody, or am I allowing them to make the direction? That's the biggest distinction.
Yeah.
And then the reason that it's so important about someone being a 1099 independent contractor versus a W-2 employee. Well, from the legal, I won't speak about that portion of it. I'm going to let Heather talk about the financial implications of that. But from the legal perspective, if somebody is your employee, you are liable for the things that they do within the scope of their employment. So if it can be deemed that they were doing something as your employee, you are liable for what they've done. And again, it's all about reducing your liability in terms of people being able to come after you, come after your company, any of those things. So when you're talking about an employee versus an independent contractor, employees set you and your company up for liability issues. Whereas an independent contractor, if it is outside of the scope of their work, it shouldn't, I mean, and frankly, even if it's outside of the scope of their work as an employee, you're not liable for that. If someone's acting completely outside of the scope of their employment, then you're not liable for that. So don't sit here and think that you're, liable for whatever your employee does when they're out on the boat on a Saturday and,
Right.
and all the rest of that. I mean, that's not the case. But independent contractors, there is a much more lenient viewpoint in terms of what your liability is regarding their actions, because it is their actions, their contract, their behavior, not a sanctioned behavior by an employee of your company.
Right. And from a financial perspective, I will say we're speaking about the state of California. Just generally speaking, sort of as an umbrella generalized statement, the state of California, when it comes to taxes of any kind, is extremely aggressive. They will come after you before the IRS does. They have been this way for many, many years. There are still people that work at the IRS and the state of California in their tax division. You can still call them and talk to them, and as long as neither one of you is having a horrible bad day, they're more than happy to negotiate with you, because they're people too, right? Everybody struggled at one point or another in their life. So again, not trying to scare anybody, but just understand the state of California, when it comes to payroll taxes and unemployment insurance, are very aggressive. If it turns out that you have been treating somebody that is supposed to be an independent contractor and is an employee, that's the state of California will come after you for the employer taxes that you did not pay.
Also, something that I want to mention is that you need to be careful, especially in the state of California, regarding having long-term independent contractors. Now, we can all thank Apple for this, and I know most of us love our Apple products, and so I'm not trying to say anything bad about them, but there was an issue where they were having independent contractors for such a long period of time that they realistically were employees. And just based off of the length of time that they were employed by Apple without them being brought on as employees, and it was found that Apple basically was using the independent contractor label as a way to avoid benefits, employer taxes, etc. And so there is a case here in California that says that there is some, they of course will not tell you exactly what it is. It's around 3 years, but it could be less, it could be more, you never can tell. But basically, if you employ someone for a very long period of time, even if it's as an independent contractor and they meet the other independent contractor statuses, you may still actually have an employee. I'm not trying to discourage you to get rid of somebody who has been an incredible long-term independent contractor. You just need to know what you're getting yourself into.
Right. And so there are some benefits to making somebody an employee versus having them to be a 1099. One of them is a tax implication. So it used to be that if you were going to hire employees, you had to sign up with it. Either you had to do all the paperwork yourself, which is horrendous. The paperwork is, it doesn't make sense to a layperson. It sometimes doesn't make sense to accounting professionals. I will admit that freely. And it's onerous. They make you fill out quarterly reports. They make you fill out annual reports. You have to keep track of everything. You have to calculate what taxes you owe and then remit them. Not only do you have to remit them to the state of California, you need to remit them to the IRS, as well as state disability insurance and unemployment insurance.
By the time you get done with all of that, most of us would be pulling our hair out. But there are some really great low-cost options out there these days. ADP used to be the 800-pound gorilla, but they tend to be very expensive, and frankly, their system is a little clunky. I've dealt with them many times before, and it's not the most user-friendly system. There's also a company here in California called Paychex. I don't know if they operate throughout the country. I know for sure that they operate here in California. They're actually pretty good. They service smaller businesses, but the price can be a little expensive. You're talking normally $100 or so per payroll. So if you run payroll every 2 weeks, you're talking a minimum of $100 every 2 weeks. There is a company called Square. Most of us know them because of the Square Reader, where we can swipe credit cards and take money. They started offering a payroll service a couple of years ago, and they started in the state of California. If you're gonna start a payroll service, you might as well start with the one that has the most horrendous regulations, right?
There's a lot of beautiful things about California. There are a lot of not so beautiful things about California, and payroll is one of them.
Right. So Square Payroll started a couple of years ago. They offer payroll services for small businesses. Being able to sign up for it is easy. All you need is an employer identification number from the IRS, which even if you're a sole proprietor,
You can get a separate taxpayer ID, EIN from the IRS. You do not have to use your social security number if you don't want to. It is very simple, very easy. You go online and they will send it to you instantly,
Yep.
or they'll email it to you. They will mail it to you in the mail. It is the simplest thing, and it's free.
yeah. And once you get the EIN from the IRS, then you can apply for an employer identification number for the state of California. Now you need both.
Right.
You need an employer identification number for the state that you're doing business in. And right now, remember, we're talking about California, but you also need the federal identification number as well. Again, EDD, the Employment Development Department, is where you apply for an employer number in the state of California. It's an online process. They issue your number to you immediately online, as well as sending you copies of the documentation. As soon as you have those two numbers, you can sign up for Square Payroll. And Square Payroll is $30 a month plus $5 per paycheck that you issue. And I believe it's per paycheck each payroll. So if you have 2 employees, you'll pay $30. And if you run payroll twice a month, an additional $20. So for $50 a month, you can,
Versus we were talking $200.
right, $100 to
minimum.
$200 a month.
Yeah.
You can run payroll through Square. And the beautiful thing about Square, they take care of all of the paperwork that needs to be filed. They take care of paying all the taxes that need to be paid. You don't have to do anything except for go in and say, pay my employees. So one of the great things is that if you have employees, you get to deduct that money. So if you pay an independent contractor, you obviously get to deduct the money that you pay them. But when you have an employee, you have to pay employer taxes as well. So think of your base salary. If somebody earns $100, we're just going to use an easy number. So if somebody earns
They always use easy numbers.
we try $100 for the whole month, right? So you pay them $100 as an independent contractor, you get to deduct that money from your taxes at the end of the year. But if you pay employer taxes on top of that, which is approximately 25%, depending on where you fall, that additional $25 that you have to pay to the state of California and to the IRS in taxes, that can also be deducted from your taxes, as well as the money you pay to pay this payroll service in order to process that. So it gives you the opportunity to A, stay in compliance to make sure that if you have an employee, you're paying them as an employee, and B, it gives you some additional options for deductions from your taxes. The other beautiful thing about this is, especially once you get to be an LLC or a corporation, you can pay yourself.
Right. Which means that you can help to pay your taxes, your personal income taxes
Through the business.
because you're now paying those as employer taxes, then taking an additional discount or an additional deduction for paying the portion from the employer or from the business. And then it also reduces your tax liability as a personal individual. Because remember that when you are a solopreneur or out on your own and you are paying all of your taxes through your independent personal income, you're probably paying somewhere between 35 and 40%.
It's close to 50%.
That's if you are paying through your own business and through those things and running it through your personal income. If you are receiving money as an independent contractor, you're probably paying closer to 50%.
Right. So if you are receiving 1099 income, if somebody is paying you as an independent contractor, the reality is that you're only earning about half of what they're sending you. The other half you should be setting aside for taxes.
Right. And that's the same thing if you are a general partnership or if you are a solopreneur, sole proprietorship. You want to make sure that you are setting aside money out of each and every month, out of each and every quarter, whatever it is that you can do. You want to make sure that you're setting aside money to pay your taxes at the end of the year. Because the thing is that remember, your taxes, while you certainly can ask for an extension if you need it, you will still pay penalties and interest on that for any portion that you don't prepay. When you ask for an extension, you are only asking for an extension for filing. You're not asking for an extension for when you owe your taxes. You owe your taxes as a corporation March 15th. You owe your taxes as an individual April 15th. Whether you pay them on April 15th or you pay them on March 15th, if you file them on those dates, does not matter. That is when they are owed. So anything that you have not paid to the government by those deadlines, you will pay penalties and interest on. So when if I file an extension on April 15th this year saying, hey, you know what, I'm not going to have my stuff ready until October, the government says, that's great. What do you think you owe us? And I say, well, I think I owe you $6,000. They go, great. Why don't you go ahead and give that to me now? Right. And then if you're wrong, we'll give some back to you. And if you're right, or if you're wrong the other way, you'll owe us a little bit, but you won't owe us $6,000 plus penalties and interest. You'll owe us, say, $500 with penalties and interest on only that $500. So it does help you to make that estimated payment.
Right. I don't recommend that you make, sometimes especially when you're a corporation, sometimes when you're a solopreneur, when your CPA or your enrolled agent prepares your taxes at the end of the year, a lot of times they will recommend that you make quarterly payments to the government of a certain amount based on what they determined your tax liability was for this year. I never, ever, ever recommend that you pay the government in advance. What I do recommend is that you set that money aside in a savings account somewhere safe. Keep it aside. Maybe you'll earn a little interest if it's a great savings, if you're earning a great return on your savings account or in an investment account that's liquid that you can get your assets back out of. But why give the government free money for them to do with what they want and then get a big refund at the end of the year? That's not a great investment strategy. Excuse me. I've been talking too much.
Neither of us can talk today.
I've been talking too much too. So I always recommend that instead of giving the government your money in advance and getting a big refund at the end of the year, I know a lot of people who are so excited. I'm getting a great tax refund, and I always think to myself, I'm like, oh my gosh, how much could you have earned on that money throughout the whole year? How much more could you have had if you hadn't given it to them first? But you need to be cognizant. You need to make sure that the money is available when the government comes asking for it.
Yeah, and so make sure that you're not spending it on anything, but if an emergency or something comes up where you do need those funds, again, they are available. Penalties and interest, they suck. Don't get me wrong, they suck.
Minimum of 10% for penalties, and then the interest is compounded. I believe it's a 1% or a 0.5%.
I think it's half of
It's a 0.5% every month that you're late, or portion of a month that you're late, compounded. So
it's not that you're definitely going to pay penalties and interest. However, if it's the difference between your business shutting down for 6 months because you didn't have those funds available to, fix a problem or something and paying some penalties and interest, again, it's a personal decision, but at least you know that you have those funds available for that. That does not mean take it out and go on a cruise,
right?
Because that's probably not worth the penalties and interest. But again,
if you're way stressed out, maybe it is. But
again, the difference between an emergency that would shut your business down, you want to make sure that you have liquid funds available for that. And if the way to do that is by waiting to pay your taxes until they're due, then that's absolutely what we would recommend.
So, and the other thing is reporting requirements. So I talked a little bit about Square and the fact that they do the reporting for you if you run your payroll through them. Most payroll companies will. The other thing that they will do for you is at the end of the year, they'll issue the W-2s. So employees get issued W-2s at the end of the year, as most people who have ever been an employee knows. If you have independent contractors, any independent contractor who you have paid more than $650, that's the latest. It may change.
It changes regularly.
it changes regularly. If you have paid somebody more than $650 during the course of a year, you are required by the IRS to issue a 1099. Now, the rules for 1099s have changed. It used to be that 1099s and W-2s had to be issued to employees and to independent contractors by January 31st. That has not changed. That's still the same. But it used to be that the W-3, which is the compilation of all the W-2s that you've issued, and the 1096, which is the compilation of all the 1099s that you have issued.
It's basically the employer side of things, the things that the employer is going to turn into the government versus the thing that you get as an employee. So as an employee, you get your W-2 or you get your 1099 as an independent contractor. As an employer, you need to send in your W-3 or your 1096 forms to the government. So it's the mirror image of one another. I mean, they're copies, but one
Right.
is sent to the government and one is sent to the employee.
Right, and one is the 1096 and the W-3 is sort of it's an overview. It's a summary report, right? Here's all of the money I sent to all of the people I sent it to over the course of the year is basically what a W-3 and a 1096 is. It used to be that you had to give the documents to your employees and to your independent contractors by January 31st every year.
And that's the same. Still,
That hasn't
still
changed.
has to be
You
done by
still-
January 31st.
Right. But it used to be that you could send as an employer, you or a business owner, you could send your 1096 for independent contractors or your W-3s for employees to the government by February 28th, by the end of February. That was the deadline for filing those. Unfortunately, over the years, there's been a lot of fraud.
And this, by the way, is not necessarily fraud on behalf of businesses or anything
No,
like that.
it's not. It's actually unfortunately, it's been individual taxpayers. So what has happened is that an individual taxpayer will be issued their W-2s or their 1099s by January 31st, and they would rush to file their taxes in that window between when they received their documents and the government received their documents. And they would rush to file so that they would get a refund. And then once the government received their documents, the 1096s or the W-3s, then all of a sudden they would realize that they underreported their income and they got a refund that they were not qualified for.
So basically, let me just give a quick example in case you guys aren't following along, because I realize it
it's a little
can
confusing.
get confusing. But say that as an independent contractor, I received 1099s from 3 different businesses. And through those 3 different businesses, I received $10,000 from one, $15,000 from another, and $5,000 from a third. And so overall, I got $30,000 in 1099s. What I would do is I would then report to the government that, say I only made 25,000, I would only report 2 of them. Or I only made 15,000, I'm only reporting the 2 smaller ones and saying, here you go, I made this for my income. And then the government, the IRS and the Franchise Tax Board would say, great, here you go. You are entitled to a refund of however much, say $6,000. Well, once they finally got the 1096s to show that no, actually, in fact, I made $30,000 and was really only entitled to a refund of $500, now all of a sudden they have to come after me for the $5,500 in refund that I received that I wasn't entitled to. So what was happening is that this was happening with individuals over and over again, and it was causing a lot more heartache and a lot more headache for the government. They were having to chase money that they had already sent out instead of just being able to say, well, wait a second, you're not owed that.
Right. So starting this year in 2017 for the 2016 year, because you report
A year late.
Basically, or in the beginning of the year after you're done. So
Right.
starting in 2017 for the 2016 tax year, they required that both the 1096 and the W-3 be submitted to the government on the same day that those documents were issued to the employees or to the independent contractors. And there are penalties for not filing those documents in a timely fashion. I actually did a post on my blog about the 1099 requirements that changed this year that we will also include a link to when we send out the video, because it gives a little clearer information and may lay it out in a way that's a little easier for some people to understand.
we totally get it that some people are more visual and you need to read something or you need to see a handout, you're not necessarily an auditory learner. So we're doing our best to give you as much of this stuff in multifacets so that you can understand it the way that works best for you. But some of this is just sort of, knowledge up in our brains that we want to share with you. So
like I said, we're trying to give you the information, open your minds to thinking about all of the different things that you need for your business. We do understand that it's a lot of information. Hopefully in this format, it gives you the opportunity to pause, rewind, play back, as well as all the other documents that we're going to provide and all of the other links to resources that we're going to provide to sort of help you get an overall comprehensive view of what you might need to consider.
Yeah, and remember that a lot of this is just getting you to start thinking. It's getting you to ask yourself these questions about your business. It's not necessarily meant to give you the specifics of what you need to do for your business, because frankly, we don't know your business.
Right.
So we can't give you those types of things. This is a general overview. This is a lot of information. It's more information than most people need for their business, but we want to make sure that you have, from inception to closure, that you've thought about all of the things along the way that you're going to need.
Right.
The biggest thing about getting into business for yourself is making sure that you are planning, that you're keeping up with where you are in your business, and that you're taking care of all of these types of things along the way. Because the worst thing that can happen is that you have a great business, you have a great business idea, and one of these little pitfalls comes along and it all goes away.
Right. That you stumble and you stop because you didn't consider any of these things. You didn't consider a couple of these things, or a couple of these things were out of your wheelhouse.
Exactly.
Right. And again, that's why we'll say it a couple more times, I'm sure, before we're done. We always recommend you try and find a trusted advisor or an expert in whatever field you're trying to get information for, because there's nothing worse than trying to do it yourself and being frustrated. A lot of times, a quick conversation with an expert will give you an answer 10 times or more faster than you can find it for yourself. Google's a great thing, but
Google is a great thing for recipes.
Yeah.
And for, like new tricks to teach your dog.
Right.
Oh my goodness, the most adorable one came up in this social media thing that I'm part of. And so I'm working on it with my dog now. But Google is great for that.
Right.
It is not great for financial advice. It is not great for legal advice. It is not great necessarily for business advice.
Right.
These are things where you need to get somebody who knows what they're talking about. And even within legal advice and within financial advice, there are so many different facets and so many things that you can find out. People ask me all the time. They come up to me and they're like, "Oh, you're a lawyer, so you know about such and such." Criminal law is the one that I get a lot. "Oh, so can you help me with criminal law?" I'm like, no, I can't. I cannot help you with that at all. I'm not going to. Technically I can. I'm licensed to, but I don't know anything about it. So why would I help you with that? There's just too many things out there as a business owner. There are too many things out there as an entrepreneur, as all of these things. You need to get other people to help you, because there's just literally no way that you could hold all of this information in your brain. And if you can, then you are Lucy from that movie? Is that what that movie was?
I think it was Lucy.
Yeah.
Yes.
And seriously, I want to meet you, because that is the most amazing thing ever. If you can hold all of this information in one person's brain.
Right. Even amongst experts, there's specializations, and you need to find the person that is specialized, because like I said, a person that has that specialized information that you need can give you the answer in a heartbeat that would take you forever to figure out for yourself.
That's why she does my books.
Right. And what's your time worth, right? What are you best qualified to do? What's your expertise? That's what you should be working on, not the things that drive you crazy and that somebody else can do so much better than you can.
And again, experts, they're all different. Maybe you don't get along with somebody's personality. Fine, don't have them as your expert. Maybe they don't specialize in what you do. Somebody who does books for a manufacturer and distributor may not be the right person to do books for a medical provider. There are nuances and there are things that are different. And so you need to find someone that works for you, works for your business. And you should not feel bad at all about interviewing experts, about, literally, you should interview an expert the same way that you would interview a potential employee. And if what they're offering doesn't work for you, then you don't need to work with them, because you're not doing them a service, they're doing you a service.
Right, exactly, absolutely.
Okay, so now that we're off of our little high horse there,
Off of our soapbox, sorry.
sorry, little detour.
So we've got 2 more sections to cover. We've got about a half an hour or so left
I think
today.
so. I think that we're
And I
right.
think we're right on track to cover what we've got left.
Yeah. So the next thing that we're going to talk about is insurance. Insurance is one of those things that, again, neither of us are licensed in insurance, and we are not going to tell you specifically what you need for insurance. That is going to be determined by your business. It's also going to be determined by your personal assets, your business assets, the type of business that you're in, whether or not you have any specialized insurances that are required of you, all of those types of things, whether you own your commercial property or if you rent. I mean, there's so many nuances that, again, we can't get into all of them, but I want you to start thinking about insurance, because if you're going into business for yourself, you need to start thinking about ways to protect yourself. And insurance is a great is a great way to do that. It's one of the few things that you can do for yourself to protect yourself no matter what happens. So even, in the face of a lawsuit or something, you can't protect yourself from being sued. If someone wants to sue you, they're going to. But
we're in one of the most litigious states, unfortunately, in the union.
We are. So, you can't protect yourself from things like that, but you can have certain safeguards in place to help you to feel more confident that you're covered in case something happens. So,
and one of the things I will recommend is that a lot of people, some of your personal insurance, like your homeowners, your automobile, those kinds of things, some of those things will cover you in business, but I highly recommend, if you're going to go into business for yourself, that you find a commercial insurance broker or somebody that handles commercial insurance, because it can be very different from personal insurance.
Right. And again, you want to make sure that you are not commingling, intermingling, and confusing your personal self with your business self. So as much as possible, you want to separate those things out. Now, again, if you have a home office or something where you are running your business out of your home, it may be more difficult to separate those things than if you are in a commercial space, but you do need to do your best to separate your personal entity from your business entity whenever possible. So again, commercial licensed insurance broker is going to be helpful for that. So there are certain insurances that you need to think about. If you have employees, you need to think about workman's comp. Workman's comp insurance is going to take care of injuries and things like that that happen on the job to your employees. If you are a corporation, you may need to consider director's insurance. Director's insurance are for the directors of your corporation, and it's going to cover you regarding what they do as a director for your company. E&O insurance is another one that people oftentimes look into. That's errors and omissions. Errors and omissions insurance covers you if you make a mistake.
Right.
So if you do something that is significantly outside of the scope of your work, or that is outside of the scope of what is considered reasonable and prudent in your particular industry, then E&O insurance can cover you for some of those things.
And a lot of times, insurance are for professionals, like for Jen or for myself.
Although technically mine is malpractice insurance.
Right.
And that, again, you may need malpractice insurance is another name sometimes for E&O insurance.
It may be specialized to your industry. So again, a commercial broker would be able to tell you, based on your industry, what that is called, what that particular type of insurance is called.
Right. And if you're licensed in a particular thing, like if my bar licensure or, a medical license, something like that, you probably know if you have some very specific industry specific insurance that's required of you. I guess technically it's not required, it's just really recommended.
Would you like the money to come out of your pocket, or would you like the insurance company to pay for it? I mean, that's really the question you need to ask for yourself.
Right. So, if you have a specialized insurance because of a certain licensure, you probably know that already. You've probably looked into that, but there are some of these other types of insurance that maybe you haven't considered. You need to consider some sort of general liability insurance or an umbrella policy that's going to cover if someone comes to your place of business, slip and fall, any sort of things like that. If you have workers who are not your employees, but they're doing some sort of worker maintenance in your building, you may need to have some sort of insurance to cover them as well. If you have vehicles that you use for business purposes, you need to make sure that the insurance policy that you have does not specifically exclude the use of your personal vehicles for business use. Sometimes it does. You need to make sure that your policies do not exclude certain persons from driving your car. I use this example. My mom helped me buy my first car. She was on the title, she was on the loan, you know, all of those things. And so when I went to go get insurance for my car, they looked at the title and her name was on there. And they said, well, that's great, but your mom is specifically excluded from driving your car under this insurance policy. I said, I'm sorry, but what are you talking about? And they said, if she wants to be covered to drive your car, she has to get her own insurance for this vehicle. So normally, you know, your insurance on your vehicle follows your vehicle. So if Heather were to drive my car, she's not specifically excluded from driving my vehicle. She would be covered if I lent her my car. But my mom, because she happened to be on the title with me, was specifically excluded from driving my vehicle without getting her own insurance coverage.
Sometimes this also happens if you rent and you have roommates. A lot of times, if there are other adults that live with you, occasionally your auto and insurance policy will ask to specifically exclude them from your insurance.
Right. Because there's sort of this assumption that they're going to be driving your car more often than just a stranger off the street. Right. And the insurance doesn't want to be insuring you based off of your driving history, when realistically, Joe Schmo, who lives in the room next door, is going to be driving your car on a regular basis.
Right.
But these are all questions that you're going to go over with an insurance broker. You may need policies if you rent. Probably your lease specifies what type of insurance you need to have. You need to have a general umbrella policy, what the policy limits on that need to be. Sometimes if you contract with certain other businesses, I used to contract with the Fraternal Order of Police as one of their as one of their lawyers that help people out. And I was required to carry a certain level of insurance in order to be one of their, you know, referral partners, one of their attorneys that could help out police officers when they needed my assistance.
A lot of times if you work with organizations like that, or if you work with government, city government, local government, federal government, they require you to carry certain limits,
right,
on your policy. So it's not just what can I get covered for? What's the least amount I can get covered for? So my premiums aren't that high. It's what's the requirements for what I need to do. So you need to make sure that you check contracts that you may sign with other people to make sure that there are not specific insurance requirements for those.
Right. And again, you know, if you're talking contracts and it's not something that you're really great at, that's something that you might want to have reviewed by an attorney so that they can make sure to tell you, hey, did you know that there's an insurance clause in here that requires you to have XYZ insurance with these types of limits? Do you have that in place?
Right.
Because remember, when you sign that lease, when you sign that contract, you're stating, yes, I understand this, and I will have those things in place by a specified date.
Right.
Usually it's the date that you sign the contract. Sometimes they'll give you a little leeway, but you must show proof of insurance within a certain time period.
Right. And again, speaking about the same sort of thing, when you sign a contract, very often some companies will ask you to be named as additional insured. That is an actual piece of paper that your insurance company issues to you that names these people or this company as an additional insured on your policy. So again, you just need to make sure that you speak to an expert. A great commercial insurance broker will be more than happy to take care of that for you. Can take care of it so fast you hardly know what to say. So again, on our soapbox, experts.
So that's sort of all I wanted to cover with insurance. Again, just want to start the conversation with you guys. Make sure that you're starting to think about these things, that there's more to starting your own business than just putting a sign out front and saying, hey, come to me, I'm really good at what I do.
Yeah.
So just start to think about all of these different things and the things that you need to know for your business.
Right. Especially in this online world where, you know, anybody can go online and start marketing and selling. And, you know, that's how a lot of people get started these days is our world is becoming more digital and more online. And that's great, but it doesn't absolve you from needing things like insurance, from needing things like tracking your money, from needing things like contracts and business plans and all that sort of thing. We're in sort of this, you know, half in the old world, half in the new world, but we're moving towards digital, but that still doesn't mean that all the rules have just gotten thrown out the window. So just these are some things to think about as you're moving along.
And that reminds me, you can also contract with other vendors who may have their own insurances. So one of the big upticks in businesses that we've seen recently are all of these coaches, right? So the people who are business coaches or life coaches or spiritual coaches or whatever type of coaching might be going on. Because we're all trying to grow as people and we're all trying to grow our businesses and we're all just trying to be better than we are, which is amazing. You should absolutely try and be better than you are if you want to be better than you are. If you like where you're at, then I'm so jealous of you because I'm not.
Personal development.
But, you know, these coaches and things like that are they're a great new industry, but a lot of people haven't considered exactly what that means. And if you are hosting live events, if you are having people come to you, then there are insurances that you need to consider for that. If you are feeding people, if you are giving them alcohol of any sort, if you are, you know, doing any of those types of things, you know, there are licenses that you need, there are insurances that you need for that, and you may want to consider partnering with a vendor that has those licenses and has those insurances already put into place, and that cost is just built into your cost that you pay to them. So the best example of this are hotels.
Right.
Hotels have all of that already figured out. That's why they offer conferencing services. That's why they can offer you a beer and wine package. They can offer you a food package, all of those things, because they've got their stuff locked down. They know backwards and forwards that they are covered. And once you sign the contract with them, yes, you help offset that with what you pay them, but you don't have to go out and get your own insurance. You don't have to go out and get your own licenses for those things.
Because there can be liabilities. Alcohol is the biggest one. If people come to an event that you hold in your home or at a location and you don't have the proper insurance, if they leave your event or leave your party and get into an accident on the way home, you may be personally liable for that.
Yeah.
So just wanting to make sure everybody considers, get a relationship with a great insurance person, because a quick phone call to one of them would be able to answer all these questions and get you the proper insurance in place. A lot of times they can do it for very short periods of time. So I know for high ticket items, there was a company that I dealt with, and they had these enormously expensive cameras, right? And they would have to send them off to the manufacturer to be repaired. Well, it costs a whole lot of money. They would have to insure them for a very tiny, short period of time, like 2 weeks, literally 2 weeks. We'd pay the money to have them insured, but it was worth it because the camera was worth $50,000.
Right.
So why wouldn't you carry an insurance policy for a short period of time in order to cover sending it out to be repaired and coming back again? So just experts.
Yeah.
Experts. That's all I have to say.
Always experts. And I do want to touch on something, and I'm jumping way back here, and so I apologize for this. This goes back to business entity formation, is something that I mentioned and I forgot to mention earlier, is that, and it is in the handout though, so you'll get it there, is that there are certain licenses that are required of you once you form a business. You may need to get a business license from the city or the county in which you are operating. You may need to get some sort of a license depending on the type of business that you are. If you are doing any business under a fictitious name or a DBA, you need to file paperwork for that. You know, anytime that you are acting as a business, even if it is within your own home, you are supposed to notify certain city or county officials regarding that and get your licenses and get accredited and all of the rest of that. So just make sure that you are reaching out to your county and your city officials and asking them if there's anything that you need to do in order to be in compliance in your own particular city for the type of business that you're running.
Right. And that, again, we're going to jump way back because, again, this is about tracking your money. So most of those licenses, especially for local businesses, county businesses or city businesses, those are based on your revenue. So they want to calculate what you owe them based on how much money you bring in that county or in that city that you're operating in. So again, you need to track where your money's coming from, so you know whether or not you owe them that money or you exclude it. There's also one of the agencies I didn't talk about was the Board of Equalization. So if you collect sales tax, or if you need to collect sales tax, the Board of Equalization is going to collect that money from you. And again, once again, if you sell inside of the state of California, you have to remit any sales tax that you collect, or any sales tax that you should have collected to the state of California. So again, you need to track where that money came from. If that money came from Florida, then you don't owe sales tax on that. But if the money came inside of the state of California, you absolutely owe sales tax. And once again, let me just remind you that tax agencies in the state of California are aggressive. If you do not file your sales and use tax payments, and you do not file your returns with them, they will come after you quicker than you can blink. So,
and remember that sales tax in California is not the same from county to county. It may not even be the same from city to city.
Nope, there are some localities that are different.
So you need to make certain that if you're doing some sort of retail sales and you need to be calculating sales tax, that you're very aware of where your sales are taking place.
Yeah.
So, all right.
We got about 20 more minutes, so
yeah.
last section, we're almost there.
And I promise this actually won't be that bad, because I'm going to send you a link to something that you're going to be able to watch for a good portion of this. So we're talking about business succession planning, which is the sort of closure of your business. And closure of your business, a lot of people take that in a negative way, and it doesn't necessarily have to be. This can be required in case of incapacity, death, those types of things. Those are sort of like the not so happy portions of it. But it might also just be that, you're doing really well and you want to take a 6-month cruise around the world. Well, you need to have a plan in place for your business when you're not there to run it, especially if you're the one that runs your business day in and day out on a regular basis.
Should we share the last handout with them?
I suppose we could. She's leaning forward this time instead of me. Yay. All right. So
you can keep talking while I share.
What we're talking about now is what's called business succession planning. And again, business succession planning, I did do a webinar about this. You're going to get a link about it. So I'm going to walk you through most of these questions on that webinar. Having the handout in front of you as I'm going through it would probably be a great thing to do, but you don't have to. So just so you know, that is available. I think it's another like half an hour or something along those lines.
All of the webinars that we did previously are somewhere between 30 and 50 minutes. And they're individual.
So you're going to get a bonus like 2 hours, 2.5 hours.
It's almost 3 hours worth of
So
content.
realistically, for this day today, you are going to get about 5 hours worth of content, and you get to watch us do all of that. Aren't you so lucky? All right. So business succession planning is basically, it's making a will for your business, more or less. It is everything from the nitty gritty to the what am I actually doing with my business at the closure? Am I selling it? Am I handing it off to somebody else to run and I'm going to get residuals from it? Am I handing it off to somebody to take care for me for a little while until I can come back and run it myself? Or am I actually closing my business down? Is it something that is sort of just going to die off with me? And then also, am I selling my business? Like I mentioned, am I selling my business? So that's the purpose of creating a business succession plan. Now, the nitty gritty are going to be things like who's going to be in charge if you're not there to run it on a daily basis. This is similar to setting an executor for your personal will. And by the way, I may use the term professional will sometimes in addition to business succession plan. I tend to use them interchangeably, but they are technically different. A professional will is for people who are required to have one. Those are usually people who deal with confidentiality issues, such as mental health professionals, attorneys, people where there are specific requirements of them in terms of who can access their files, deal with client confidential information, etc. So a professional will may be required in your industry. It is required in the state of California for mental health professionals. So if you do not have one and you are a mental health professional, you really do need to draft one. I will tell you that this is not, again, it's similar to a business plan. This is not a legally binding document. It is not, something that you can run down to the courthouse and have it enforced, but it is making sure that you are making a plan for your business and that you're putting things into place the way that they should be done when you're not there.
It's more of a roadmap.
for what's going to happen at the end.
It's like a business plan, but which is why we call it a business succession plan. It's like a business plan, but it's for what happens after.
Right.
So first of all, you need to decide who's going to be in charge of what. You know, if you're going to have one person, if you're going to have multiple people, you know, you want to pick somebody who's good under pressure, who's good in times of stress, so that if something sudden happens, that they can take care of it and that you don't have to worry about them. Okay. You also need to figure out who's going to serve as a backup. That's because life happens, things change,
Right.
and someone who is available today may not be available tomorrow. So you need to make sure that you have at least one backup in place, possibly 2, possibly 16. What do I know?
A whole list.
If you've got 16 people that you trust to take care of your business, you're doing a whole lot better than I am. But you just never know. You know, they may be dealing with a family emergency of their own. Who knows? Maybe you and your person that was supposed to take charge, maybe you guys were on a business trip together and something happened.
Right.
You can never tell.
Maybe it was a wife or a husband and you unfortunately got divorced. I mean, what happens then?
Right. So there's just so many things that can happen. You want to make sure that you have a backup. Coordinated planning, this sounds much more like intricate than it is. What it means is you might want to talk to your person that you're going to leave in charge and your backups all at the same time, because different people may think of different things. Something that you might consider to be just common knowledge may not be.
Right.
You know, while I may know, you know, the code to the office, or I may know, well, of course, I always keep my planner in the top drawer of my desk. Heather may not know that.
Right.
And maybe I've named her as the person who's going to take over. And now she's like ransacking my entire office trying to find something that I don't even keep here, that I normally keep at home.
At home. Exactly.
So you want to make sure that that type of information is translated to whomever is taking over for you. Things that sometimes people don't think about are like keys, right? How many copies of your key are there? How many people have one? Are there spare keys somewhere? Do you want to give a spare key to your successor now, or do you want to have it delivered to them should something happen? All different things, like, you know, it's the same with like entry, you know, codes for security codes and things. If you change them regularly, you need to make sure that, you know, that you either give them the information once you change it, or that, again, you're keeping track of it somewhere, that place is going to be given to them, that they're going to get notice of it, et cetera, so that they can get all of this information should they need it.
So sort of like a business plan, it's a living document, right? It's not something, it's not a one and done. You don't just put it in place and set it as, you know, put it in a drawer and it's a static document that just stays that same forever. Just like a business plan changes the way when your business changes, when anything changes in your business succession plan needs to change too.
Right. And business succession plans and business plans are something that you should realistically review a minimum of once a year.
Yeah.
I mean, even if you don't think anything has changed, you should review it at least once a year. Probably you should review them both quarterly, but I'll let you get away with once a year so long as you do it regularly.
Right.
Okay. Your schedule. So again, this is like what I was talking about. If I have an appointment book, if I keep an online schedule, any of those things, you need to make certain that whoever's taking over knows where that is, because something happens to you and you're not going to be there on Tuesday and you're supposed to meet a key client or you're supposed to meet an investor or something. Whoever's taking over needs to know that information. Now, client records and contact information, this is something that can be extremely sensitive. So you need to make sure that you are in compliance with any and all regulations pertaining to client records and confidential information. If you are dealing with people's finances, if you are dealing with confidentiality issues like legal issues or mental health issues, anything like that that may fall under HIPAA laws, you need to make certain that your records are kept in such a way that the person handling your business succession plan is compliant with all regulations. That probably means that if you are in something that requires some sort of confidential information, that you are picking somebody as your successor who is in your same field. But with that being said, if you have specific requirements regarding authority for or permission for accessing that information, you need to make certain that you are notifying your clients anytime that you are naming a successor, that you are changing a successor, et cetera, and you need to get their explicit written consent for somebody else to access their information. The thing with client records and client information is that somebody may need to go through and contact your clients to say, hey, what do you want me to do with this? Do you want me to give it back to you? Do you want me to shred it? They may need to keep it for a certain period of time. That all depends. It's all very industry specific and client specific, but you need to make sure that you're in compliance with those things. Okay. Avenues of communication, that's just how do you get in touch with your clients? What do they like? What do they not like? Some people choose to leave so new messages for your answering machine, email, etc. Some companies, you need to notify everybody when a key player has passed on or isn't going to be available. Other companies, they don't want you to know. They just want life to continue and for you to go on and be happy and just, do you know every time that a major change happens at McDonald's? Probably not. They don't think that you as the consumer need to know that on a day in, day out basis. But if something were to happen to me, I think my clients probably need to know that something happened to me.
Right.
So that's just one of those things. Informed consent, we already talked about actually. And client notification is along the same lines. You need to tell in your plan how clients are supposed to be notified, when they're supposed to be notified, whether they're supposed to be notified about this type of a change.
Right.
Colleague notification is sort of the same. You need to make sure that other people in your industry, if there's something coming up with them, that they know that something has happened or that there's a change to who's going to be taking care of anything.
Right.
Professional liability coverage, this sort of goes down, to insurances and other things. You want to make sure that you're naming the proper people in there, that they know who carries your liability insurance, that liability coverage and other insurances are canceled if anything should happen to you. If you have questions about, the next one is attorney or for professional issues, always have an attorney review anything that you're unsure of if it deals with contracts or it deals with any sort of legal issues. Billing records, procedures, instructions, expenses, all of that comes down to, if you've ever worked for anyone besides yourself, you know that somewhere there is a policies and procedures manual.
Yep.
It exists. If you have ever worked for a corporation, there is a policies and procedures manual. It was given to you at some point. You ignored it like every other employee.
Everybody does.
But it was given to you and it exists. You need to have one for your own business. And that is so that if something happens to you, somebody knows everything that's in your head. Okay? Expenses. You want to make sure that your executor or your successor has the ability to pay expenses on behalf of your business so that your business can be shut down properly, can go on without you, whatever it is that you've decided for it. Personal will. If something serious happens to you in terms, basically we're talking about death here, and I realize that's not a happy subject and we're not ending on the happiest of terms here, but
We got one more thing to cover, so we can slide past.
slide past it. But if something were to happen to you, what do they say? The only two things that you can guarantee in life are death and taxes. And we've talked about both today.
Yay!
But if something happens to you and, you do die, you need to make certain that if you want your successor or your executor of your professional will, if you want them to be covered in terms of the expense that it's going to take for them to carry out your business succession plan, you need to make sure that your personal will provides for that. And then you need to make sure that you review your personal will and your professional will or your business succession plan next to one another so that you make sure that they do not somehow accidentally exclude one another, conflict, that they talk to one another, basically. Copies of the professional will. Some people give copies right away to people that they've chosen as their successors or, whatever you want to call them. Other people choose to keep the only copy for themselves, and then just to make sure that that copy is distributed appropriately should the time come that you need that succession plan. There are merits to both, and really it's a personal choice. And then review and update. We went over that already. Make sure you're doing it at least once a year. I'd recommend quarterly, unless you're super anal about it, in which case, by all means, review it daily if you want to. I sometimes change my passwords daily. Not intentionally.
It depends on if you forget.
It's because I can't remember the last one because I haven't signed up for LastPass yet. So
not yet. Soon.
Okay, well, I think my staff uses it.
Yeah, her staff uses LastPass, but she doesn't. Go
So-
figure.
Right. So just make sure that you're reviewing and that you're updating, that you're getting all of the information where it needs to go. But a professional will or a business succession plan, however you want to call it, is a great idea to make sure that all of your ducks are in a row, not only for the terrible things that could happen, but like I said, in case there's something where you just want to step away from your business.
Right.
It's a great stepping stone to moving on to a point where you don't have to work in your business every single day.
Because the reality is that if you want to expand your business, if you want your business to expand exponentially, the only way that can happen is if you are not the only one that knows how to do everything.
Right.
The only way for your business to expand 2 times, 3 times, 5 times, 10 times is if you start relying on other people to do the parts of your business that you are not most uniquely qualified for. If you're not the expert, find somebody else to do it.
Experts.
Okay.
And then we do have one other thing, but Heather, I'm just going to pop over to us and stop sharing for a second because Heather's going to talk to you about business valuations, because that is another small piece of the puzzle, potentially large piece of the puzzle, if you're talking about shutting down a business.
Right. So sometimes you just shut down a business and you just say, yep, we're closing the doors, we're done, we're out of here.
Mm-hmm.
But if you want to potentially sell your business, one of the pieces of the puzzle is a business valuation. Now, most people look at a business valuation, they're like, great, so my building is worth like $1 million and my equipment is worth this and my furniture is worth that, my computers are worth that, and that's all fine and dandy. You can find the information for that on the internet. Google, right? So Google.
This is one of the places where you can use
Google is good, right? So Google can tell you what the value of those assets are. It can give you a valuation on a commercial property. It can tell you what square footage is worth, what dollar per square footage is worth. It can tell you what your the furniture is worth. Craigslist can tell you that, right? So what's my
I don't know
furniture
that
worth?
I would trust Craigslist.
I know. I'm just saying. There's plenty of places where you can get the value of physical assets, things that you hold in your company, equipment, machinery that you need to run your business. But there's other things that you can't as easily put a price on. They're called soft assets, right? They're the things that are in my brain, things that are in her brain.
There's nothing in my brain.
They're the things, intellectual property. What intellectual property do you own in your business and what is that worth? Key people in your business. Sometimes a business may be worth millions and millions of dollars because of one key person.
That goes back to insurance. There's a type of insurance called keyman insurance.
Yep.
If you've got someone in your business where your business is worth a ton of money because of 1 or 2 particular people, you may want something called keyman insurance on them. Again, talk to an insurance broker, not one, but just so you know, there are
Right.
so many different insurances out there.
Right, but that's one of those soft assets. So the valuation of your business may change significantly if that person does not want to continue with the business if you are no longer the owner. So when you're looking if you are looking to sell your company, again, there's business valuation attorneys. There are people that do business valuations. Again, an expert in a very specialized field. Because of course, you're talking about a negotiation with somebody else. You may think your business is worth $5 million, $10 million, $50 million, but you need an expert to help tell you, what those concrete assets are worth, again, probably fairly easy to find, but then also somebody who can help negotiate on your behalf for what the soft assets are worth. Your client list, right? Your vendor list, especially if you're in a specialized industry where those kinds of things are proprietary. If you have proprietary products, proprietary information, those soft assets are worth a heck of a lot of money.
And they're worth more than your physical assets, probably.
Right, to a certain client, to a certain customer. If your competitor is trying to buy you out and you have proprietary information, that is worth a lot of money to them. So just make sure, again, experts, make sure that you talk to a business valuation attorney, get in touch with a financial professional that can do business valuation, especially for things, like I said, like the soft assets, the intellectual property, your client list, any proprietary information to your business in order to get a realistic valuation of your company. Because if you want to try and get money out of your company, that it's also a great exercise at the end of your business life. even if you don't end up selling your company, at least you know what it's worth. It lets you make that informed decision about whether or not you're going to sell or whether you're just going to shut down. Because you can always sell a commercial building, right? But what's your intellectual property worth? What's your client list worth? What's all of that sort of information worth to somebody else?
Right. Okay. So the last thing that we're going to leave you with, I'm going to go back and share our screen again. And again, you're going to get copies of this. So, you know, that's not a problem.
Don't worry about writing everything down.
Yeah, because that's what we were all doing, right? Was trying to frantically scroll through and write this all down. So what we're going to leave you with is a where to focus when checklist. And this is a great little just quickie checklist for you to go through. And it's got 3 sections. It's got getting started, expand your reach, and honing your practice. These are sort of the things that you need to do when you're first starting out, the things that you need to do in the middle of your business, and then things that you need to do once your business is well established. Now, this does not cover everything, and some of this is perhaps specific to an industry that you're not a part of. Like in honing your practice here, we've got like host live events. Maybe you're never going to host a live event. That's perfectly fine. You need to sort of play with this checklist and make it work for you and for your industry. But these are some of the things to consider. You know, establishing your entity, opening a business checking account, determining who you serve and how. These are all things that we talked about earlier. Separating your personal and professional money, figuring out your business plan, figuring out what type of business entity you want to be. These are all things we talked about in the beginning, right?
And these are not a 1, 2, 3, 4, 5, 6. I mean, these are not necessarily things to do in order. You may jump around. You may jump around from the getting started into something in the middle, into something at the end. Especially, we all play to our strengths, right? That's actually what we recommend. Play to your strengths, right? Don't try to shore up your weaknesses. Find an expert for that.
Exactly.
Right? So play to your strengths, but you may jump around in this list based on where you are in your business, what your strengths are, what you play to best. But if you're struggling, if you're having trouble in your business, go back to this list and see, well, did I miss something? Is there something that I skipped over that maybe I should have gone back to?
Yep.
And this is not comprehensive. Again, it's just sort of
it's a check-in.
Yeah, it's an overview. Where am I? What have I done? What might I be missing?
These are some of the key things that we've learned or that other people that we know who are experts in their fields have learned along the way. And so we just want to give you sort of, you know, I mean, we just give you what, 5 hours, we're talking about 5 hours worth of content, plus we're talking about 12 pages or so worth of handouts. We wanted to reduce it down to a few key things that you could take a look at and see where you fit and if there are things that you're missing. You know, expand your reach, which is sort of the middle there. We're talking about recording trainings. We're talking about increasing social media presence. You know, social media is sort of like the new marketing presence these days.
Social media, I've heard somebody say that social media is just, it's the internet, right? Where do we all go? I mean, we don't go on the internet anymore to play games like we did when we first started out. I mean, social media is sort of the internet.
Right. You know, you're starting to develop joint ventures, strategic alliances. This is where your business plan is, you know, really starting to get going and getting you from point A to point B. Maybe not from point B to point C yet, but you're definitely in your mid-road between point A and point B.
Right.
And then honing your practice. This is my favorite, I have to tell you, because
Well, what's part? Oh, it's the vacation one.
well, no, and hire an assistant.
There you go.
So have a tax entity evaluation, hire an assistant. You know, this is where you're beginning to be able to hire your experts. You're beginning to offload things from your plate. You're beginning to expand your business beyond you. It's not just you that's getting everything done. And then absolutely by far my favorite one is schedule a vacation.
Because really, we love our businesses, right? I mean, that's why we got into business, right? In the first place, is we love our businesses. And I know for myself, I can work nights, I can work weekends, I can work 16 hours a day sometimes if I want to. But you really do need time to decompress, unwind, integrate the information that you've got, and you need some time away from your business. So schedule a vacation. It's important. It really is. Downtime is important.
Absolutely. And, you know, and it doesn't have to be anything big. You don't even have to go anywhere. You can schedule a staycation.
Right. Just turn off the computer, step away from the phone.
Do not look at your email. I don't care how many times it goes off.
Right.
But yeah, That's absolutely my favorite piece of advice out of this entire thing is once it's
Schedule
all
time
said,
off.
once it's all said and done, figure out how you're going to step away from your business, because the goal of any person going in, if the goal of going into business isn't to make your business work for you, you're not going into business.
Right.
You are
You're
just working, but you're working for yourself instead of for somebody
Right,
else.
right. You're an employee. You're an employee of your own business, but you're still an employee. So you're subject to somebody else's time schedules and somebody else's demands.
So the point of all of this is that no matter where you are in your business, no matter where you are in your plan, if you're just getting started or if you've been in business for a while, or even if you're thinking about closing your business down, there's always something to think about. There are always questions out there for you to deal with. And we hope that you've gotten some of the answers to those today. And if not, that at least we've led you in the right direction for where you can find answers and the questions that you need to be asking yourself at each of those different stages.
And we know that this was a lot of information, especially in a compressed amount of time, even with the additional resources. Like I said, you're going to get 5 hours worth of content by the time we're all done with this, including
Probably closer to 8, because have you heard how fast we talk?
I know, right? Including handouts. And like I said, there's a link to a blog post about the 1099s and the W-2 changes that I will absolutely send out with this as well. So everything included, there's a lot of information to take in. So we wanted to invite you, if you're here today with us, if you're on the webinar with us, or you're getting this recording later, we are going to have a 4-week group class. It's going to run evergreen, so it's going to be continuously running. You can join at any time. And what we're going to do during that 4-week class is go over each of these individual sections more in depth in a group setting. The calls are going to be an hour, and in addition, each week you'll have an hour with either myself or with Jennifer.
No, not an hour.
Oh, I'm sorry.
She said an hour.
I said an hour. My mistake.
I apologize.
20 minutes with either Jennifer or myself to go over additional questions that you have, depending on what you need that week. Maybe one week you need legal advice, one week you need financial advice. We're trying to, as much as possible, create sort of a total package, at least for the 2 areas of expertise that we can cover. And we also have referral partners that we can send out to you if you need help in
If you
insurance.
need an insurance guy, if you need, if you need
a business valuation attorney, if you need any of the resources that we've mentioned in this webinar, we have resources available. So the 4-week course that we're going to offer is typically $997 for a 4-week class. Like I said, for those 4 weeks, you get 1 hour of group coaching where we'll go over each of these sections in depth in a group setting where you can ask questions specific to your business. And then there's also going to be a follow-up question or a follow-up of 20 minutes each week with one or the other of us. You can even have both of us if you really want.
If you want to listen to the 2 of us talk at the same time,
Maybe not.
a great idea. But you can if you like this. If you like this dynamic, we're all about it. Well, we cater to you.
But especially if there's something that you don't want to bring up in a group setting that is more personal, that you want to talk to us, that's more private, we're more than happy to make that additional time available for the group setting. There will be a link included with the webinar to the group coaching program if you would like to join us on the group coaching program. Like I said, it's going to be evergreen. It's going to roll. So once you're in for the 4 weeks, and then we also offer some follow-up time at the end of the 4-week program. So thank you so much for joining us. We know it was a lot of information and a very short, compressed time. We're going to send out the links to all of the original 4 webinars that we did. Each one is somewhere between 30 minutes and 50 minutes. I talked a long time on one of them, sorry.
We went all quick nerd on you. So if that's what you're into, you're set.
And a copy of the handouts from today, as well as links to any of the other resources that we mentioned today. Thank you so much for spending your time. We know your time is valuable, and we absolutely appreciate you being here with us.
And we apologize if you came to the live event and then had to watch this one too, just so that you could, follow along with it all over again. We realize that's way too much time with the 2 of us, but thanks.
Thanks. All right. Have a good evening.
Thanks. You.